Good day, good night, good morning, and hello, wherever you are in the world. Yes, we have a worldwide following. More of that later, potentially. Nice teaser. Welcome to the Media Beat, episode 83. I'm Oliver Turnbull, your host. Maureen and Claire are the experts, and we'll be looking at, as usual, loads of stuff today. We'll be looking at Netflix in great detail in a minute. The bidders for WBD. We'll talk about the AI bubble and is it bursting? And that is an interesting one. Integration of Hulu into Disney, the AI presenter I'm trying to call you've probably heard of, etc., etc. Oh, and of course, you stay tuned for Celebrity Traitors, which I think Maureen and Claire are both fans of. I haven't actually watched it. It sounds like it's fantastic. And quickly, a shout out to Dr. Alex Connick, who was on last time because his book is out today. So as this episode drops, you can go onto Amazon and order Entrepreneurship in Media and Entertainment. And I personally don't believe that title does much justice to the depth that Alex goes into in AI and entertainment, which you probably heard, hopefully, on episode 82 last time we dropped, as I think the phrase is. So check out Entrepreneurship in Media and Entertainment and the last episode. If it's anything like what we talked about, the book's going to be brilliant. So we have to crack on very quickly to the deep dive, and it's going to be a doozy. Maureen, it's one of yours, and it's titled Netflix Update, but I suspect there's slightly more to it than that. So without further ado, Maureen, over to you.
Thanks, Oliver. Absolutely. So, we always cover the earnings results of Netflix, and Q3 results dropped. And so this quarter, Claire and I will talk about not just the numbers, but really kind of the strategy, actually, because the numbers are a bit messy around Netflix. And it was really all about a couple of things that really didn't do it good service in terms of, how Netflix is behaving operationally. So anyway, the headlines were indeed messy, Oliver. They had a one-off 600 million tax charge in Brazil, which oddly enough, and for all the accountants and tax folks out there, they would not expect it to have hit the operating margin, but it did, just by way of how Netflix decided to cautiously account for this big charge that they say is going to be a one-off. So anyway, they did report operating margins down 28% to 28%, triggering a dip in the stock. But underneath, as we say, the business is solid. Revenue is up 17%. Record engagement, which I'll talk about in a minute, and margins that without the tax charge would have topped a staggering 33%. So, no operational weakness here, just a one-time accounting knock. So I saw three things, and I'm going to quickly run through three of those because I really want to get Claire's view on a couple of these. So, look, the real story here about Netflix and something that we've been, looking at is engagement. Netflix share of total viewing hit records, 9% nearly in the UK, 8% in the US, showing really how deeply it's bringing in audiences. And it's doing that, we reckon, because of the content. The content slate has been really good this year. We had K-pop Demon Hunters, Happy Gilmore 2, and of course The Big Fight, which really does, is one of those major draws. And Q4 is also slated to be pretty damn good with Stranger Things and, of course, another film, the sequel to Knives Out. I have to say I wasn't a big fan of the first, but nonetheless, I might give it a little go at, and Claire will probably tell me that she's probably a big fan. So I'll have to get get that riled up in a minute. The second thing is Spotify. So they've gone and hooked up with Spotify, and they bring in The Ringer. Other podcasts into Netflix. Now, this is not to compete with Spotify, but to really capture more of the entertainment time of all of us in their one ecosystem. So a really smart move. They're moving away from just being a pure streamer to this multi-format platform. And then my third thing, before I engage in a battle with Claire, is M&A. So on the earnings call, Ted Sarandos reiterated that Netflix has always been, and we know this, more a builder than a buyer. But he's always said that they're on the lookout for good opportunities. And he gave us a little bit of visibility as to what he meant by that. And the lens he looks at this through is, will the acquisition, will the company, strengthen our entertainment offering? Will it add value in ownership, and will it accelerate our existing strategy? And of course, that type of language left us all with that little bit of room of speculation to say, aha, is it looking at Warner Brothers Discovery? So, as we all know, and we'll be talking about this later in the show, that is up for sale. But this sort of flip flop is a little bit, I don't know. It's a bit confusing as well. Now, Warner does have great IP, as we know, but it also has and will come with a lot of legacy, and a legacy that I see probably as baggage. It's got the linear networks and it's got heavy debt. So for Netflix, I think that type of acquisition might necessarily not be fit for, and not be consistent with that kind of like three-pronged strategy that Ted Sarandos mentioned. So anyway, there's a lot going on in this quarter. The fundamentals are definitely intact. Engagement is definitely climbing, and I think what's really happening is that they're really sort of maturing, and the benchmark here is really very much the discipline of how they're operating the business. But Claire, whether or not you want to attack those in reverse order, but I was not keen on Knives Out. I really wasn't.
Oh, I like there are two. This is the third movie. I like the first one. The second one was fun. I do like a murder mystery, and they work incredibly well for Netflix. They've really invested in those sort of light-hearted murder mysteries between The Residents and the Adam Sandler movie, etc. They know it's the cozy murders is what they're called. They're a great segment for them. So expect more of those. I'm afraid, Maureen. Listen, I think I agree with you. I think this was for me. These were the results where really Netflix went from a disruptor to an incumbent, and it's an incumbent. It's a dominant incumbent, as Google has become, for instance, or Amazon. And as a dominant incumbent, it can do something which not many people can do, which is to define which metrics they get measured on. And that's how they decided not to publish subscriber numbers anymore, which surprised a lot of people. And they don't disclose their advertising numbers. And I think, they made that choice, and it was a bold choice, and probably a slightly, I would assume a self-interested choice. It does prevent any real forensic look at what's going on under the hood, which is obviously the point, but it makes me a little bit nervous. I think you're absolutely right. And the reaction of the market says, listen, we know you're not a growth story as you used to, but we do think you are in a really strong position, and your underlying fundamentals are very healthy, and you're doing all the right things. That being said, they're not growing as fast as the market anymore. So yes, their subscriber base is growing, but it's growing much less fast than the number of people watching streaming. I think there's some of the stats here said that, their US TV audience grew by 1.1%, while the overall streaming went up 12.9%. So that's where you are, which is normal because they're much bigger than everybody else. So everybody else is growing faster, but that's the sort of data we're going to get. Meanwhile, we're still not getting any information on the advertising beyond it's more than doubling, which is kind of useless because if it was $2 to start with, $5 is still quite low. And it's also not giving us much visibility on some of their diversification strategies, such as gaming. So it's just not telling us very much. It remains a very well-established incumbent. And I think what I've always found very impressive with Netflix is their ability to stay very agile and change their strategy depending on where they see the market going, try a few things, give up. YouTube and Google were very good at that, still are very good at that too. And in order to be able to do this, you do need to be very mindful of not overselling things to the market because you want to be able to retreat. And I think that's what we're seeing here. I do think the Spotify deal is quite significant, sorry, in terms of showing that they are absolutely seeing their biggest competitor as YouTube now. Because the whole point of the Spotify deal is that those video podcasts that they're getting are not going to be available on YouTube anymore. And they're trying to move people away from YouTube. And those video podcasts, those video versions of podcasts have really exploded on YouTube over the last few months and years. And we should do deeper dive on YouTube soon, because they've also invested enormously in content YouTube in parallel, which is obviously very dangerous to Netflix. Netflix is also in a position where most of their content suppliers in terms of content licensing are now their competitors. And so they're finding it harder to get content licensing. So they're doing a lot of content production themselves, but that's much more expensive and it's not always successful. You've talked about some of their biggest successes. They've also done quite a few things that people have liked less. And there has been a sort of growing rumor that Netflix is perhaps entering, this is a new word, it's not a new word, but it's a word that I've learned this week, which is enshittification. The enshittification of a platform. Did you know this?
No, tell us, Claire.
So,
Tell us how to pronounce it and then spell it for us. Yeah.
Yeah,
I thought it was a
people have
word
to
that
Google
people
it.
who've got new puppies use.
I'm going to call it platform decay, which is another way to talk about it. But it's essentially what's happened to Google and Amazon, which is where at the beginning of the platform on Facebook, the platform focuses exclusively on the end user and on the experience of the end user. And at some point, it switches to prioritizing the advertisers. And then in a third stage, it starts focusing on prioritizing the shareholders. And so the experience becomes less and less good for the end users and also eventually less and less good for the advertisers. Now, we're not quite there with Netflix because they are still prioritizing their end users, but you can see that the end user experience is getting slightly less good than it was. There's less content, there's less premium content, there's ads. If you don't want the ads, you have to pay extra, which is a whole new thing. And so, can they avoid that that tendency, which every other large platform has gone through in their time? That's going to be a wait and see. So interesting results, but interesting for me in what they didn't say.
Cool. Thank you very much. Goodness me, I had a horrible thought there that Claire had frozen because she's miles and miles away, but more of that later. Thank you very much. Enlightening, educational, and entertaining, just like the original chart of the BBC, roughly. And so much more. That, my friends, is Netflix. And this is In the News. Okay, so let's start. So, Claire, it's your story, and you have travelled halfway around the world in order to give us this breaking story, or is it a breaking story? I don't know. It's WBD again at Warner Brothers Digital, and the bidders thereof. And guess what is rearing its mountainous head once more is Paramount. But Claire, you have that story.
Yes, hello from the Pacific Ocean. Which, thanks to the wonders of technology, we can all be together again. So Warner Brothers Discovery has announced that they were in strategic review and looking for sale or divestitures, and they've talked about potentially breaking up the company. And they are starting to attract bids. And what happens in those strategic reviews is they're attracting bids and they're saying yes or no or maybe, etc. And then things happen. So Paramount Skydance, the new Paramount Skydance, led by David Ellison, is the primary bidder. It's the most aggressive bidder. And according to most people in the market, it's probably the one that's going to eventually get it. It wants the whole thing. It doesn't want to break it up, or it might once it's bought it, but it wants both the streaming business and the legacy TV businesses. You can see why it would integrate very well with Paramount. It would make a lot of sense. Now, what's happened is it's made 3 bids. The latest was at $23.50 a share, which is about $56 billion in total, small numbers. So far, WBD has rejected all of them because they're hoping that it will keep going up, obviously. And it probably will, because they definitely have the money and they really want it because they can see it. And there's a sort of very strong strategic alignment there that will push them to continue. There are other potential bidders. Netflix has been mooted. And again, as you said, Maureen, and I thought that was quite interesting, they didn't say yes, but they also didn't quite say no. So they were very careful to leave a little opening there. And I suspect they haven't quite made up their minds. And they're probably wondering what they could get it for cheap, which I don't think they will, considering what's going on in the bidding war at the moment. I think they're probably considering now that they wouldn't get it for cheap and it's not worth doing. But Comcast may be interested, perhaps not in the whole thing. Amazon may be interested. Both of these might face regulatory hurdles. Apple, I can't really see it happen, to be honest. That seems like a stretch. And Netflix, we've talked about, would be a departure, but we've said it. They're agile. They've done different things before. If they thought this was a good value asset that they could leverage, I think they would go for it. But I don't think it will. I think it will be quite an expensive buy. And at the moment, if I was a betting woman, Oliver, I would bet on Paramount Skydance. But what did you think, Maureen?
Yeah, so this is going to be another. It'll all be played out. It'll be played out in the press, of course. So, I mean, if you think about it, 56 billion is what 3 years of annual content spend that Netflix would put down. And guess what? That comes also with the headaches of trying to integrate the legacy business. So, I still think that Netflix could definitely write the check and outbid Ellison, and Ellison knows that. But I just, again, not sure if Netflix is really in the room. The door is ajar. They just sort of got their ear to the glass outside, listening in. I agree with you. I think Ellison, of the several that you mentioned, probably wants this more than anyone, and probably needs it as well, just in terms of getting to that scale. And really being a force to be reckoned with, and really competitive in the streaming world that we're faced in. So we've always expected consolidation in media, and it's now playing out in front of us. I mean, the issue is going to be around timing. So my sense is Paramount probably doesn't want Warner Brothers to split and then look to 2026, because I think the business would be much more expensive. And I think he doesn't get the scale if he just acquires the one or other, so the streaming part or the old legacy bit. So I don't think it's going to work out for them. So they've got to be really quick at getting their bid in and signed off. I agree with you as well. Amazon, I can't see the industrial logic. Apple, again, they're not media. They're not into media industry, into media buying, unless it's something that is device centric. I don't think this is. And again, at 56 billion plus, they can buy other content to put it onto and through their systems. So I'm with you. I think Paramount is probably the likely buyer. There are still private equity houses out there, though, Claire, that might be interested. Could potentially step up. But I think you're right. I think Ellison wants this so much that he might just continue to pay over the odds. Exactly what happened with Comcast and looking at Sky, when we had the bidding war that went on between Disney for Sky and Comcast, and Rupert Murdoch played an excellent game at keeping the two of them frothing up and keep outbidding one another. I wonder if that's what David Zaslav at Warner Brothers is planning to do. So an interesting one, yes. But we're in agreement, I think.
I wonder if there's a place where you can place a bet. I'm going to have a look at Betfair. That they normally support kind of obscure bets. I might put some money where my mouth is.
I mean, this would be quite a. I don't think that you'd get very good odds. Yeah, you wouldn't get very good odds on this one.
Oh right! I just thought it was like I was talking to a stable lad in one of the main stables, and they had a tip on the Grand National. But it's a bit more obvious than that.
It's a bit more obvious than that. And plus, and just a disclaimer on our podcast: we are not encouraging betting. Just a disclaimer for all those young folks who are listening to us. Yes.
Oh, well, a friendly bet amongst friends.
For younger listeners, absolutely. But for middle-aged gentlemen, then no, never mind. We offer a 10% surcharge. No, not finder's fee. Anyway, whatever it is. Anyway, probably distracting from the important business of Paramount in the front running on the rails with the lightest jockey, let's say, to stretch that metaphor beyond its elastic limit. The next story, Maureen, we've got one for you, and you are looking into your crystal ball as usual. Marvelous example of crystal ball it is, and you're looking to see, AI bubbles bursting. People are talking about that. One suspects that it might be different types of AI where the bubble might burst or might not burst. But what are your thoughts on that? What's that story, Maureen?
Yeah, so absolutely right. There's growing debate over whether AI, the AI boom, is turning into a bubble. So, I mean, as Claire and I have been sort of looking at these numbers before, but the investment numbers are ridiculously huge. They're enormous. I mean, if we just take Nvidia, now becoming, I think maybe for a brief moment, it probably was the most valuable company this year on the back of soaring demands for its AI chips. But I think we have to step back. There are two things going on here. One is something which I love what it's called, and Bloomberg decided to call it the circular financing. And what that is really money moving within the same network. So here's an example of that. So Nvidia is funding a company called CoreWeave. CoreWeave buys Nvidia chips. OpenAI runs its systems on CoreWeave's infrastructure, all supported by overlapping backers. So these all are known businesses, they're real businesses with real technology. But the open question here is whether their revenues can keep up with the capital racing in. So effectively, as Bloomberg calls it, it's financing one another in order for all of them to just continue to grow. So bit of an issue there, but one to watch. And Bloomberg has been fantastic at drawing all these maps to show where all this circular financing is. But the second point that we have to sort of focus on, which I think we covered in one of our episodes, and Oliver, you just alluded to it. When we say AI, we have to unpack what do we mean AI? Is it the apps? Is it the foundation models? Or is it the infrastructure? So, and we know, because I think we spoke about this ad infinitum, that each of those layers, each of those three types of AI have different business models, different risk profiles, different capital needs, and different time horizons for payback. I mean, the infrastructure is capital intensive with long payback periods. And we also know that, foundation models may have huge upfront costs, but very unclear revenue models at this point. And then apps may have shorter returns. So, I mean, the question isn't simple. It really isn't, But the question is AI a bubble, or are we just valuing each layer inappropriately or appropriately? So the financial structures supporting each layer, are they stable or not stable? And will demand really show up in time to justify the investment? So long answer to the question, but my takeaway is there are genuine signals here of overreach and risk. But yes, there's also great real opportunities if the fundamentals hold. So, what are the assumptions behind that bet? And what happens if that market pauses before any payoff arrives? So, in short, the boom may still have legs. That's my opinion, but it's far from guaranteed. And the difference between boom and bubble could come down to timing, discipline, and real world demand, especially around the AI stuff. That's my view.
I'm going to add a few things to this. I completely agree with you, Maureen. I don't think who knows? But I think we're looking at an adjustment more than a bubble burst, but potentially a significant adjustment, because I do think there has been overvaluation. I just wanted to talk about your circular financing, because there are a few other examples in history of those. And my favorite one is Ford, Henry Ford. We're talking about 1914. Do you remember that, Maureen? You must have learned this in economics, in business classes, where he doubled the salary of his employees so that they could buy a car. That was the original circular financing, and it worked incredibly well, because the churn of his employees went down significantly, and two, they all went and bought a Ford T, which was his new affordable model. So that was a good example of circular financing. But keep that in mind, because there are also bad ones, and the main one is that people mention is Lucent, and just generally telecoms providers, which lent money to their clients to install telecom infrastructure, and then lost everything. And this is late 1990s. And the big difference is whether the end consumer is involved or not. And this is my worry about the AI model at the moment in the circular financing. The end consumer is not in that loop at all. They're not spending any money. They may be using the platforms, but we don't exactly know how much and how much they value it and whether they would pay for it. And as long as that circular financing doesn't involve the end user, I think it remains very fragile. And at some point, it's going to have to cost the end user money to use these models, because otherwise you are going to get into a position of complete pyramid scheme / bubble. And so that's the question. And going back to platform decay, that probably means also a slight enshittification of the user experience, as they start to have to pay for things that used to be free. They start to have to cope with ad loads and sponsored search and all of the things that made Google a less good experience for a while until they reversed the trend. So I do think we're looking at you know the market much better than I do, Maureen, but I do think we're looking at an adjustment from a market point of view, because the fundamentals, which for me remain the end consumer's willingness to spend, hasn't been proven yet in any way.
And I agree. So Claire, I think that's why we're seeing the likes of an OpenAI and its recent launch of Atlas, for example, that's moving into the browser. So it's moving into search. So it's really trying to disrupt the Google dominance in that area, because it wants to keep everyone in its ecosystem as well, and then therefore lay the foundations for advertising. And I think there it will try to shift and try to pick up the revenue, or improve its position for a revenue model, which will be ad funded. But agree. I mean, at the moment, it's just enterprise led, funding of the foundation models that we see, especially like with the likes of OpenAI. Yeah.
Well, that's a story that's going to run and run if ever I heard one. But I suppose it's when everyone's talking about technology and there's hysteria and there's hype and there's also nonsense as well. I'm amazed at how many podcasts you can listen to, and the experts are just talking nonsense just to get clicks. It's like we're actually all living in a simulation, for example, is a popular one, and people seem to fall for it. And when people fall for things like that, they tend to put their money into weird stuff. So let's see. Brilliant analysis as ever. Thank you so much. Last story, and it's a Claire one. Claire, from your island retreat. It makes you sound like a James Bond baddie, but I think you're probably in a really nice resort.
I've got a cat on my lap that I'm stroking.
Yeah, exactly. Very slowly saying, I know I expect you to die, Mr. Hulu. This is about Hulu, and it's about Disney Plus integrating it. It's as my son works for Disney, I'm extremely happy that they're doing well. What's the story?
Well, the Disney, we covered this. Disney completed its full acquisition of a Hulu a few months ago, and now it's integrating it into Disney Plus. So the standalone Hulu app. This will not make any difference for anybody who doesn't live in the US, because we've never had a standalone Hulu app. But in the US, Hulu was the original streaming service. We did a deep dive on it a few months back, if anybody wants to go back to the history of it. And it's disappearing as the Hulu content becomes integrated into Disney Plus. From a business perspective, entirely logical move. Why would you run two separate platforms, two separate subscription packages, two separate ad inventories, etc.? So I totally get the logic, and it was expected after they ended up buying the rest of Hulu from Comcast. From a consumer perspective, again, especially in the US, potentially not a great outcome, because there are a lot of subscribers to Hulu who just want Hulu content. They're not interested in the rest of Disney Plus, and now they're not going to have a choice. They're going to have to either buy the whole Disney Plus subscription, which will be significantly higher potentially, although that's not been announced. It's expected. Or nothing. They won't be able to say, do you know what? I'm quite happy with my Hulu or Hulu Plus or ad-based Hulu or all of these things, and I don't need the Disney Channel. I don't need all of this extra content. So it's a forced bundling, as it were. for consumers in the US. From consumers outside the US, it's the appearance of a slightly weird brand called Star, which you might have seen appear on Disney Plus, which used to be a cable channel outside the US run by Disney. And they're going to rebrand everything Hulu, which again makes sense if you're based in America, but Hulu is not a brand that resonates at all outside of the US. So it's going to mean that you need to build a new brand, although it's a sub brand to Disney Plus. I don't think it matters very much. So I think, what we're talking about is probably increased prices, reduced ability to choose what you want. We're going, and it sort of reminds you of the cable packages of yore, and again, slight disruption and the shitification of the user experience potentially, especially in the US, but a very much an expected move from Disney. What did you think, Maureen?
Yeah, I mean, we were sort of waiting for this, and
Yeah.
I guess it fulfills Bob Iger's super app strategy that he's been chasing for so long now. So it unifies streaming, sports, and then, as you say, everything then eventually will be, within Disney's touch. So it's from theme parks to retail, and content along that spectrum. So, I mean, I think the bet is bold, simple but bold. If you're in the ecosystem, you're going to be treated with as a valuable customer. If you're outside and you want bits of it, well, tough luck. so so I think not a surprise, but let's just see in terms of the execution and see what happens to the numbers. But this is what he was looking for, the super app strategy, and he's delivering against that tactic. Yeah.
Very good. And just to prove that not only am I one of the leading and talented producers of podcasts in England, I'm also one of the most spectacularly efficient archivists. And I'll prove that by saying if you want to re-listen to Claire's deep dive on Hulu, the story behind Hulu, you will have to go back to May 2024, episode 49 of
Wow.
Movie Beat.
Wow,
And
that's
Can't believe
No,
that
that's
was that
archiving.
long ago, but it was a great
Oh.
one. I mean, as I say so myself, it was a really interesting. I really enjoyed preparing for it, so hopefully it's worth
Very
it.
interesting story, yeah. But it's so long ago. Golly, the time flies. And as platforms get more intuitified, our podcast just gets better and better. And that was a bumper news edition of Proves It. And we call it In the News. And moving on with the speed of a bursting bubble, we have podmojis, and I'll be the host of podmojis this week. And we're going to start with Maureen. Yes, I know you're going to have an opinion on this. I hope you do. It's the Channel 4 AI presenter.
Yeah. Oh, yes. So, So Channel 4 did something that no British broadcaster has done yet or before. They gave us a fully synthetic TV presenter. But guess what? It was in Dispatches special, which was Will AI Take My Job? And viewers met Aisha, if I'm pronouncing that correctly, Gaban, who looked and sounded entirely real until at the end of the show where they revealed that she was actually synthetic, or it was synthetic. Okay, so it's been the AI was created and built by Kalel Productions and the digital fashion brand Valora. So the big question here is, right, is she the IP of Khalil? Is she the software vendor, or does she belong to Channel 4? This is going to be a fascinating debate and discussion, not dissimilar to the debate and the discussion we had with Tilly Norwood as well. So she has got rights. It has got rights. What happens when Channel 4 wants to, say, put that show in a promotion or a trailer? Who needs to sign off? So not only have we entered the synthetic world of TV presenters, which actually showed us that, yes, you can have a TV program and not realize it was generated synthetically. And are we going to be able to deal with this commercially? So I think the lawyers and the commercial folks are all probably unpacking that to see where does the contract lie, who owns what, and what does it mean going forward. Channel 4 does say, though, that it's a one-off, but let's see. So my podmoji is
Oh, wow.
Ah,
Scream.
oh. Scream.
Scream.
Got it. Got it. Oh dear. Yes. So terrified. Okay. Yeah. Sorry, Claire.
Well, my podmoji is I'm tipping my hat. Look, there's a hat. Potentially virtual AI generated hat. If we had video, we would add it later in post. And I'm tipping my hat to Channel 4 because it was a great, very controversial, completely worthwhile experiment. And I think it got them a lot of press, rightly so. And I think they did it, I would argue, in the right way, and respectfully to presenters, and in a way that would spark a useful conversation. Some of the themes that Maureen has just highlighted. They've been very careful in their whole communication to explain that this did not mean that all of their presenters or any of their presenters were going to be replaced by AI, and the show was still scripted and written and developed and produced by humans, even though the presenter was AI. So the content was very much human led, I would say. So I think we will see more of these, and I think it's the right way to experiment, to be very open and transparent about it, and to highlight the positives and the negatives of the technology. So I like it.
Yeah. Oh, you can't put the genie back in the bottle. I just had looked her up, Collie. She looks real. That is terrifying, but there we are. We knew it was going to happen. Yeah, good. Excellent emojis. Just adding up scores there. Right. Taylor Sheridan is leaving Paramount, Claire. How does that make you feel and want to express yourself?
This is a tricky one. Taylor Sheridan, I think we mentioned him before on this show. He is a hugely successful TV producer, creator, showrunner, and producer in the US. He was originally an actor. He was an actor in Sons of Anarchy, and then got fired, and then was very upset and decided to start writing instead, and then started writing 11 hit shows in a row, which is quite unheard of in the US. And some of these have been massive, and most of them, or all of them so far, have been on Paramount and Paramount Plus. Although, unfortunately for Paramount, they sold the rights to Yellowstone, which was the first one originally when it was not yet successful, to Peacock. So they don't have the rerun rights for that. But everything else has been on Paramount and Paramount Plus, including last year's Landman, which was the biggest show on Paramount Plus. And Paramount Plus has 5 shows in the top 20 most streaming shows in the US, and all 5 are Taylor Sheridan's shows. So, he is huge. However, he is also very, very difficult to work with. Famously, one, he's very expensive. 2, he has his own circular economy in that he owns a ranch, and everybody who works in his shows, which tend to all happen in somewhere in Texas, and people ride horses, they have to go to his ranch and train for 6 weeks, all the actors and the staff and everybody on his horses, and he gets paid for that. And he, everything happens within the day. He's incredibly smart and incredibly successful, but well known for being very difficult to work with. He got into a fight with Kevin Costner, which basically ended up with him killing Kevin Costner on Yellowstone. Sorry for the spoiler if you haven't watched this, but this was a few years ago, just because he didn't like him. This is Kevin Costner. Like, you've managed to get on your hit TV show, and you just get into a fight with him, and then you kill him off. That's Taylor Sheridan. So Zaslav, I think. Well, sorry, no, the Paramount's been managing this relationship for a while and struggling to manage it because he's quite difficult to work with. His deal was meant to renew in a few years' time, and he's just announced that he will be leaving from Paramount as soon as his obligations are fulfilled next year, and he will be moving to NBC Universal, who have been courting him for a long time. Paramount will retain the shows that he's made for them. So, I mean, I don't know. I think it's potentially a good move for NBC Universal, but it could be a poison pill. Those big egos, they're very hard to manage. So I guess I need a podmoji now. My podmoji is, look, I'm holding a potential poison pill. It's a pill. Is it poisoned? I don't know yet. Go with it. I don't have a lot of props here.
Okay, no. It can be an imaginary prop. Your acting makes up for it. So there was a small gap left between index and thumb finger for those not watching on YouTube. Maureen.
I love that. Sorry, poison pill. I actually saw one. That's amazing. I think this is like the return of the so-called mega deal era, where
Yeah.
studios compete for high-profile creators and as much for franchises as well. But your background to that in terms of a difficult character, quite prickly and so on, you can see why maybe that probably helped or assisted the transfer. But we've seen some of these before. You remember, Claire, when Netflix signed up Shonda Rhimes,
Yeah.
from away from ABC, and it
She
really
did
does.
do a lot of
She
great
did.
shows
She
for
did some
Netflix.
great shows for Netflix. I think also Scorsese and DiCaprio, their production company, as well, with a similar move across to Apple TV Plus, and Amazon did it also. We're still waiting to see how successful Phoebe Waller-Bridge is, and Danny Glover. So there's a few out there, but I think what it also says is it's a bit risky out there, isn't it? It's a lot of money. You're backing, you know, an individual, a megastar, a writer that may only stay with you for 2 to 3 years, and then off they go. Because these contracts, I think, only are what sort of multi-years, so 2 to 3 years. It's a lot of money. They're very expensive, and I think in a crowded market that we're in, I think you've really got to place your bets carefully. So let's see. I think it goes across to NBC 2028, something like that. So I'm sure he'll be scribbling down on his pen the next shows. It's a long time for gardening leave, isn't it?
Yeah, I don't know when he starts. Actually, that's a good question. It might be a bit earlier
Yeah,
than that. Yeah, yeah. I feel like
I think I
it
saw
might be next
28.
year. 28
I
was
think
the
it
end of his
starts.
contract. Yeah. Ah,
He
anyway.
starts January 2029. He starts, according to
Oh, who
some
knows when we'll all
magazines.
be there?
Yeah, yeah,
That's a long
yep.
time.
It's
But
a long
yeah,
time for gardening leave.
Could I
Anyway,
trouble you
I'm
for
going
maybe a
to I'm
podmoji
going to
or? Oh,
I'm
yeah.
going to
maybe
name
Maureen.
check Donna Langley at NBC Universal, who's quite a famous. We've mentioned her before because she tends to sign up the biggest talent, and she's got an incredible track record of getting the talent at NBCU, and very successfully. And in this case, she really absolutely made it her mission. She courted him for many years. She went to the ranch. She spent a lot of time with him, and so
I'm
we'll see where that goes.
and I'm sure and she obviously knows how he ticks, so
Yeah,
she's obviously going
yeah,
to she'll do a great job. But it's just a long time to wait, isn't it? But as I
yeah,
say, he can be writing new shows while
yeah.
he's sitting there in his gardening leave, although that's
He
not
looked.
Oh,
meant to be
you're
gardening leave. Yeah,
you're quite right. It starts in 2029, earlier for
yeah,
movies, but we're talking
yeah,
about $1 billion for little Taylor Sheridan, so he's done quite well. But again, at the moment,
yeah.
he's capturing something in the American psyche in terms of the
Oh, for
types
sure,
of show that people
absolutely.
want to watch. And he's, as Shonda Rhimes did a few, decades ago, and I think he is at the moment something of a golden child.
Exactly, and you would expect David Ellison to say, do anything to keep him in the stable. So obviously he couldn't. Maybe it just
I
far too late.
my
Far too
my
late.
read is that Paramount was finding him quite tricky.
Yeah.
I don't know if it was still worth it, but not. But at the point where do you want to pay $1 billion to deal with somebody who's been quite difficult to deal with? There is even with the most talented and the most in demand people, there is a moment where it just becomes a lot of time and effort. And Ellison is busy doing other things, including potentially buying WBD, which will give him access to other talent. He's
It's
probably
funny.
trying to diversify as well.
He looks like he should be advertising Marlboro cigarettes. This geezer. He doesn't
Oh
look like a
yes.
writer.
Yeah. He's always
He's
Oh,
very
Stetson.
much the cowboy. In fact, one of the
yeah.
presents that one of the people who were trying to hire him gave him was a pair of cowboy boots once worn by James Dean. He's the sort of that he
Wow.
collects that sort of thing. Yes, that's him.
Yeah,
Wow.
it's
Oh
a
yeah.
cowboy writer. I did ask you for a podmoji, Maureen. I haven't
Yeah.
been satisfied so far.
While Claire was fact checking us, I was opening up my Podmoji, as in a book for
Oh, I see. Were you?
let's yeah, I was
Good.
let's wait and see, as the
Let's wait
chapters
and
go
see.
by.
Yeah.
Oh,
The
chapter game.
chapters go
Okay, got
by.
it.
We're being very
The
virtual
stories
in our
going over.
podmojis today. There's a clear lack of
So thanks for that.
props. We need to do
Of
better.
props.
Yes,
Yeah.
it's very well. It is, but you're both scoring quite well. It's going to be down to the last one, which is ironic in a sense, or appropriate in a sense. Celebrity Traitors, extremely successful. I don't even know how it works, but Claudia is always a good watch. But anyway, let's start with you, Claire.
Yes, Celebrity Traitors, which is a UK celebrity version of the format Traitors, which originated in the UK and is now an international format, is a huge success. It's incredibly fun to watch. So if you're in the UK, or even if you're not in the UK and you have access to it, I don't know if it's as fun if you don't know any of the people, but I think it might be actually, because first of
Because
all,
you get
they're
to
all,
know them, don't you? Yeah.
you get to know them, and they're, there's like pretty big names on this. There's Stephen Fry, who is an international star, Jonathan Ross, who is not, probably. But anyway, it's drawing over 10 million viewers, which is insane in television. This is live viewers. And it's also drawing young viewers. In fact, I started watching it because one of my kids told me to watch it, which I thought was quite funny. So again, quite unprecedented, I think, probably since Love Island, to have younger viewers go to the live experience like this. My daughter watches it live on her iPad, which is hilarious. But there is a TV downstairs, but they remain, they have an audience share of something between 40 and 50%, which is basically half of the UK TV audience watches it, and people talk about it. This has truly become a water cooler moment, which there aren't that many anymore, and especially if you can drag them over 6 weeks, which I think is the total run. It's pretty impressive, and it has shown no sign of waning. In fact, it's growing, and that's partly thanks to catch up, because even those who didn't log in or watch the first episode are catching up on replay and going back and wanting to be part of the conversation. And it is really good fun to watch. So well done, BBC. Well done, Claudia. Well done, the cast, the casting team, because it's an incredible cast, and it's just somehow a brilliant shared experience. So I'm going to raise a glass. I found a glass. That's my
Right.
prop.
Is it full?
No, it's not full. It's
like 8
8
a.m.
o'clock
over
in the
there, isn't it?
morning here.
Yeah.
But I'm raising a glass to the success of Celebrity Traitors, because I always love it when an unscripted show like this really captures the imagination of viewers and becomes a shared moment. I think it's lovely, and I really enjoy watching it.
It does. That shared moment is great, isn't it?
Yeah.
And I really should watch it. Oh, question: I suppose I'd have to start watching it from the very beginning, or I wouldn't understand. Right?
Oh yeah, no, you need to.
Yeah,
you need to. But you will. You should download them and just binge watch the first few. I did that on the plane over, and
makes sense.
I was giggling to myself on my plane on my airplane seat, showing some strange looks. Yes,
that's good. Well, that's hard to beat. So that was a very very good podmojis. And Maureen, you've all to play for in the last straight.
Okay, so I agree with absolutely everything that Claire says. I'm absolutely hooked. Absolutely. But okay, I'll take a different slant. I think it says we agree with the format. Format is absolutely amazing, and kudos to BBC. But it also says something about celebrities today. I mean, Stephen Fry, Alan Carr, Paloma Faith, Tom Daly. They all appeared on his. These are top celebrities. Not long ago, these big names would not been anywhere near reality TV shows. And even
but
Stephen
this
Fry
isn't quite
says
reality.
that.
This is quite a high-end reality show. Yeah.
But even Stephen Fry said in one of the interviews in the show, he said he wouldn't even thought about it, but just he couldn't resist it. He couldn't resist it, and I think that says a lot about us as an audience as well, because we want to see these stars when they're not perfect. When they're going to be, I'm reacting to the pressure that they put under. I mean, it's absolutely amazingly well done, and they're going to doubt people, they're going to trick people, they're going to expose, themselves to be these nasty little things or these wonderfully faithful things, So, I mean, I think it's amazing and beautifully done, beautifully executed, and superb surroundings. So, kudos as well. I got an empty water glass as well, Claire, so I'll raise that.
All right, lovely. Yes, very good. Very good. Oh, well, yes, very good. Now that's you too. It's it's going to be a draw. It's a draw this week, actually.
Oh my goodness! Look at that.
Yes.
How is that possible? How is that possible?
1,301 points each. So congratulations. That's very, it's funny. The other thing about celebrity, if I was a celebrity, I'd resist, and then I'd go, no, I want to show I can beat the other celebrities and be cleverer than them and smarter than them. So that's probably what's making them do it as well. It's a bit of ego as well. I want to show that actually I'm clever, or I want to show that behind the scenes I'm a really nice person as well. You can imagine Alan Carr and Stephen Fry and possibly Paloma Faith as well. Certainly Tom Daly. He always seems like a nice boy who wants to be liked. We should do our own version. So that's good. Well done. A draw in podmojis, and that brings us to the end. So we're gonna have to leave you, but we're hoping maybe, seeing as you're travelling on across the dateline, Claire, that we might have some fans in New Zealand. I'm sure we have listeners in New Zealand. Is that something you're hoping to make use of? Maybe they'll put you up.
Yeah, can I? No, I don't need anybody to put me up. But yes,
Yeah,
I'm going to New
this
Zealand
is why we do this.
Australia on a continuing Pacific trip. So if anybody, I'll have to brush up on my English again because I'm in the French-speaking part of the Pacific at the moment. So do reach out, New Zealand and Australian listeners. Somehow, I'm not sure how you reach out. On the LinkedIn page probably is the easiest.
Yes, that's
and let me know what I should see and do. And when we next speak, I'll probably be back in England. But yes, wonderful episode. Thank you, Oliver.
Yeah, so I'm just looking down the line. Can we see Australia? Yes, Australia is there. We're massive in Australia. 1, 2, 3, 4, 5. They're our 6th most listened country, or country with the most listeners in. And New Zealand is a little bit further down, but 1 in 200 of our listeners is a Kiwi, a beautiful, lovely Kiwi. So there we are. So if you do see Claire on the street, give her a wave. We should have a secret phrase that you've got to say. Then you win $10 or something. I like the media beat, or hit me with the media beat, or something like that. Say hit me with the media beat. Say to Claire on the street in Wellington, and you'll get yourself $10. We'll reimburse you the $10, Claire. Don't worry. So that's
okay. Thank you. Appreciate that.
But she's with her family.
It's 10 New Zealand dollars. I should.
10 New Zealand dollars. The currency of the country that you're in. Yeah, that's right. So. I don't know what that means in French Polynesia. I mean, maybe just some shells. I have no idea. Right, so I enjoyed that. That
they
was
have
lovely.
the Fond Pacifique, I'll have you know here. It's a special
Fond Pacifique.
Yes, exactly.
Pacifique. Well, it's a bit like the Caribbean dollar, isn't it? They've got a Caribbean pound, actually. So that's good. Well done. Slightly colonialist conversation. But never mind about that. We've had a wonderful episode. Thank you so much for your contributions, which have been marvellous, Maureen.
Thank you. Bye, Oliver. Bye,
likewise and happy travels, Claire. We miss you.
I'll be back soon. Bye, Oliver. Bye, Maureen. Bye, everyone.
And see you on the next one. But for now, bye-bye.